Welcome back to this lesson. In this lesson, we are looking at an example of scalping the Asian session, and we are looking at this data here. So we start with the weekly chart. So in the weekly chart, we find that from this point, we hit this weekly order block here, and opposed to this, we have an imbalance. And also in the daily chart, when we come to the daily chart, we have this imbalance here. There's also this imbalance here, so we just look at both of them. Yeah, here. And also this now, once this was confirmed, this was our order block there, this candle. So we'll look at this in the 5 minutes chart to be able to outline to be able to see how we would have scalped the Asian session and the opportunity that was provided on that particular day. So in the first imbalance in the daily chart, we see that we hit off our session zone, which was the Asian session. So that's not we are interested in here right now. But the next one, we see that the next imbalance, we hit it during the Asian session here, and after that we see that we also ran buy stops. We ran buy stops here in the market, and immediately after that we see that the market created a breaking structure, which was here. This is our breaking structure here, and from that breaking structure we got the break and also the retest, but the retest occurred later on. So if we look at this price data during range, we also have in this during range we have a retracement back to equilibrium, and we can see that we did not get a retest on the breaker here because the market just continued to expand lower. So there are instances in which the market will create these circumstances, but also we look at the 5 minutes, the 1 minute chart here to be able to fine-tune our entry point, because I know that this here along we have an entry point in the 1 minute chart, but below this breaker we have this imbalance, and we have seen below this imbalance in the during range of this imbalance is where our equilibrium is. So the market hit this imbalance and also drove into the equilibrium point. Then the market started rearing lower. So this is the opportunity that we have. Remember that we are trying to enter as much as premium as possible and put our stop loss at the high of the breaker. Remember now that this is our daily imbalance, so we have to know where to exit. So first we look at the 1 hour and the 15 minutes and the 4 hour as our higher time frame to capitalize on our exits. So let us go to the 1 hour on the 3rd of November, and on the 3rd of November we see that here it is. We are so far. So on the 3rd of November we had this gap. So this would be our objective to be able to for the market to fill. So this would be the area in which we want to look out for. Let me go back to the 5 minutes. So in the 5 minutes chart, this is it. We are using the short position. So this is our stop loss, and then our target, which was the 1 hour gap, the 1 hour gap of the volume imbalance to be able to capitalize on for our exit. So that's it for this strategy and for this example. Remember what we are focusing on while journaling and demo trading is the price range, how far we stayed in, how many pips it took or we stayed in drawdown, and how long did we take to move from our entry to our exit. So it took 3 hours and 10 minutes. So average, you want to get the average time that the market takes between your entry and your exit. Yeah, so let's look at the 1 minute here on the 3rd. So in the 1 minute, the 3rd of November, remember that was our buy side liquidity, and in the Asian session, this is where we want. So we see we ran buy stops. Then let me remove this. There's this first breaking structure here, which we had also a small imbalance here where the market ran down, and then we also had this breaker. We see that we ran the breaker there. So we have also this imbalance. Once we broke, we have this imbalance. So you can also enter at this point and sell your market. So you can see how the 1 minute time frame provides a lot of opportunities, because there is also this other imbalance here. There's another one here. Any imbalance as we are drawing lower is an opportunity, but you have to be careful to navigate between the 1 minute and the 5 minutes, because you see this retracement came on about because we also had a 5 minutes imbalance. So be careful where you're entering in these re-entry patterns, not to be caught in drawdown or by the market as it's repricing. So that's it for this lesson, and see you in the next one.